You're watching this Forex Preview here at xm.com. I'm Cristina Marujas. Joining me today is investment analyst Cristina Barcenido, and we'll be having a closer look at the Nonfarm Payrolls report out of the United States on Friday. Cristina, the Fed has made it pretty clear that it will be closely watching the next employment data in order to decide when to start tapering, with markets eyeing September as a likely time for such an announcement. Therefore, Friday's NFP report will be one of the week's highlights. What should we expect to see in the numbers of the July report?
Hi, Christina. Well, expectations are for a slightly larger employment growth of 880,000 in July compared to 850,000 in June, which could consequently pressure the unemployment rate to a new low of 5.7%. The annual growth in average hourly earnings could be another bright spot, showing an expansion of 3.9% year on year from 3.6% previously. While base effects may have partially contributed to this boost, but probably if true, this could also be an encouraging sign that employers have started to provide higher wages to fix the scarcity of qualified workers and bring back those who decided to leave under the generous unemployment benefits. Now, overall, the report is expected to be another success for the U.S., showing a progressing U.S. labor market. But the real question here is how long will it take for the labor market to achieve the desired significant progress, which the Fed asks to start its bond tapering procedures? To put it differently, the Fed believes that increased hiring over the past year is not enough to motivate any reductions in bond purchases for now. And the truth is that there are still some 7 million jobs to recover completely, of which an important portion has retired and is not expected to return. So unless we return to strict lockdowns, it may take some months until the economy absorbs a significant percentage of these loss and the Fed starts cutting its bond purchases. But according to the Fed board member Christopher Waller, the central bank may not be patient for long, or otherwise the central bank is optimistic that an employment growth of 1.6 to 2 million in July and August could be enough to motivate a bond tapering announcement during September's policy meeting. Also, Fed Governor Brainard said that we have to wait until September's non-farm payrolls come out on October 8th to assess the progress in the U.S. labor market. So if not in September, November's policy meeting could be the next potential day for making official announcement on bond tapering. And we shouldn't forget that unemployment benefits expire in the first week of September, and perhaps more people could apply for jobs before that day, and therefore the Fed could have a clearer view on how the labor market is performing during its September's meeting, the earliest.
Now, given that July's report is expected to come in stronger than June's, what could that mean for the U.S. dollar?
Well, investors have become more sensitive to employment data because that's the Fed's priority at the moment. So I think Friday's non-farm payrolls could move the dollar if the data come above or below expectations. And in this case, I would look at euro dollar because the ECB is not expected to change its policy anytime soon in the Eurozone. So that suggests that movements in the pair could depend more on Fed announcements. And if Friday's data manage to raise the odds for a tapering announcement in September, then I think the pair could bounce up to retest the 1.90 resistance level and then the 1.1950 barrier. Otherwise, the price could move lower to meet support around 1.1820 before moving lower towards its previous low of 1.1751. But perhaps the movements may not be sharp on Friday, since investors could get stronger signals about what the Fed is thinking about bond tapering during the Jackson Hole Symposium at the end of this month.
Cristina, thank you for being here with me. This was the Forex Preview on non-farm payrolls out of the United States on Friday. Thank you for watching at xm.com.